We're looking at the currency market now with Michael Keenan, the head of Forex Research at Standard Bank. Michael, a very good morning to you.
Hello, Stephen.
Well, Michael, we have the rand trading around 7.29. A little earlier, it was trading at 7.26 against the dollar. I saw, and that's despite the dollar strengthening yesterday on the back of quite positive economic numbers coming out of the United States and some weak services data coming out of the Eurozone.
Yeah, dead right, Stephen. Of course, a lot of the rand's strength over the past few weeks or so has been a function really of dollar weakness, and we saw the dollar kind of retreat and back, or should I say, recover some of its losses, and the dollar, at least the rand, duly made back some of those initial gains and has started to edge back a little bit higher. We still believe that the rand is going to struggle to sustain gains much below kind of the mid 720s. We do like the rand weaker from current levels on a fundamental basis, and it's been very difficult. We've seen this dollar dominating proceedings with the dollar rand market, and there's been this risk appetite coming through. But as I say, we don't think it's sustainable, and we think the rand should continue to weaken from current levels.
Of course, we had a minor blip with the rand on Tuesday, going up to about 7.35, 7.36, and of course, part of that was ascribed to reports that the ANC was going to be discussing the possibility of a Tobin tax at its policy conference next month. Now, reports out this morning suggested that could only become a reality if it ever became a reality in 2012. Do you think this clarification has given some comfort to investors?
Well, Stephen, I think, it was always going to be a bit of a storm in a teacup because, we've seen first and foremost a similar kind of a tax being invoked in Brazil. It didn't, result in much success. In fact, the Brazilian real continued to strengthen. And I think we are definitely in early discussion period in terms of this matter. I think it's going to take some time before we have any more clarity and any more conviction. I wouldn't expect anything until possibly the medium-term budget for more concrete clarity on what's going to happen with this tax. I don't think it's possibly the way to go in terms of controlling rand strength. I would expect to see a lot more reserve accumulation coming through, and possibly maybe even another interest rate cut. Although saying that, I don't necessarily believe that another interest rate cut will actually weaken the rand, because we continue to see these strong portfolio inflows, and of course an interest rate cut might actually be supportive of that. So I think if we're going to see some nudging by the authorities in terms of the rand preventing it from strengthening, I think we're probably going to see it through the reserves data, and of course we're going to see more clarity on that ground when we see reserves figures published tomorrow morning.
Michael, we had those ADP employment numbers out yesterday looking quite positive, and of course just a precursor to the non-farm payrolls numbers that we're looking for tomorrow afternoon. In the meantime, we also have the BOE and ECB making their rates decisions. How do you expect all of that to drive the markets from here?
Well, if we begin with the employment figures, of course everyone's waiting for the non-farm payrolls tomorrow and Friday. The market's expecting 65,000 jobs to have been lost in the States last month, compared to 125,000 in the month before that. And of course yesterday's ADP employment report actually showed an increase in jobs. 42,000 jobs were created in the States according to that report last month. So now there's a bit of a chance that we could actually see that non-farm payroll figure coming out tomorrow a little bit better than expected, and that possibly ties up with our early discussions about why the dollar is starting to enjoy some short covering. More clarity on the job figures between now and then will of course be the jobless data this afternoon, but I think really the one to watch is the non-farm payrolls tomorrow afternoon. In terms of the BOE, expected to keep their rates flat at 0.5% today. We still think that the risk lies in them hiking. We don't see any more cuts there, but I think the first time we're going to expect a hike out of the Bank of England will probably only be the first quarter of next year. In terms of the ECB, also expected to keep their rates flat, this time at 1%. And we actually feel that there's a risk of them cutting one more time before the year's out. of course, much is going to depend on their growth outlook, and their growth outlook is being influenced by those austerity measures. If, of course, we do get that double dip scenario playing out in Euroland, then the ECB might be prompted to cut rates one more time. The market feels that rates will remain on flat for the rest of this year, but we think the risk lies in one more interest rate cut of 25 basis points. But for today, no change is expected.